So, what if I told you the secret playbook for building generational wealth wasn't actually written for billionaires? What if it was written for you? Well, today we're tearing open that playbook, breaking down the exact strategies the wealthy use to build a real legacy and showing you how you can start using them, like right now.
You know, it all starts with this one big myth. We see all the headlines about the ultra-rich and we think, oh, that must require some secret offshore accounts and a whole team of crazy expensive lawyers. We just assume it's completely, totally out of our league.
But what if that's just wrong? What if their playbook actually uses simple, accessible tools that are sitting right there, ready for you to pick up and use? Well, that's exactly what we're going to break down today, the 3 essential plays for building your very own financial legacy.
All right, play number 1, this is foundational. I mean, before you can even think about growing wealth, you've got to protect it. We're talking about building a financial fortress, and the cornerstone, the absolute bedrock of that fortress, is a legal tool called a trust.
Okay, let's just demystify this thing right now. A trust is not some complicated billionaire's toy. Nope. It's basically just a legal container that you create to hold your stuff. And here's the key. It lets you pass those assets on directly, completely bypassing something called probate court, which is basically a long, expensive, and super public legal nightmare that happens when you don't have one.
So, you've got 2 main choices here. For most of us, especially when we're starting out, a revocable trust is the way to go. Think of it like a flexible blueprint. You can change it whenever your life changes. An irrevocable trust, well, that's more like pouring concrete. It offers some serious protection, but you can't easily change it. The smart move? Always start with flexibility.
And setting one up is probably way more straightforward than you'd think. First, you just decide the rules of the game. Who gets what and when. Easy enough. Second, you find an estate attorney. And here's a pro tip. A lot of them now offer affordable, flat-fee packages, which is a total game changer. And third, and this one is absolutely critical, you talk to your family about it. A little transparency now prevents a world of headaches later.
So, what are we putting inside this fortress? All your major assets, your house, your brokerage accounts, even a small business. You can also name the trust as the beneficiary of your life insurance. That's just the fancy legal term for who gets the payout. But, and this is a big but, look at that warning at the bottom. Be super careful with retirement accounts like IRAs. Moving those can trigger immediate and very, very expensive tax bills. So always get professional advice on those.
Okay, fortress is built. Now for play number 2. A fortress is awesome for protection, right? But it needs an engine to give it some real power. And surprisingly, that engine is life insurance. It's time we stop thinking about it as just some boring safety net and start seeing it for what it really is, a powerful tool for creating wealth. $1 million. I know, that number sounds absolutely massive, right? But here's the crazy part. For a young, healthy person, getting a policy this big can be shockingly affordable. Seriously, we're talking about the cost of a phone bill or a couple of streaming subscriptions. This makes creating a huge, substantial legacy almost instantly attainable. It's incredible.
And this quote from Suze Orman, it just nails the mindset. When you're trying to figure out how much coverage you need, don't just sit there crunching numbers. Ask yourself a simple question. If I were gone tomorrow, what would my family really need to live without panic, to stay in our home, to pay for college? That number, that's your starting point. It's an act of love.
Okay, so this is where things get really strategic. Why do we connect the engine to the fortress? Why not just name your spouse or your kids directly on the policy? Why go through this extra step of putting the policy inside your trust? Because this is where the real power move comes in. By doing this, the trust gives you total control to set rules for how that money gets spent. It shields the massive payout from estate taxes and it protects it from creditors. But maybe most importantly, it creates a clear, undeniable plan that prevents family fights and preserves everyone's dignity.
And now, for the master move. This is the advanced strategy, the one that separates just leaving some money behind from actively building a dynasty. It's all about using your life insurance policy to go out and acquire more assets while you're still alive.
Here's the secret sauce. Unlike term insurance, permanent life insurance policies have a savings part that builds up cash value over time. And the wealthy? They don't just let that cash sit there. No way. They take out tax-free loans against it. And get this, there's no credit check because you're basically borrowing from yourself. You literally become your own bank.
This creates this incredible, powerful cycle. Here's how it works. First, you fund the policy for a few years to build up that cash value.
Then you borrow against it to buy an asset that generates income. Think rental property. Then you use the income from that brand new asset to repay the loan to your own policy. And once it's paid back, you do it again and again, acquiring more and more assets.
Okay, let's put some real numbers on this to see how it works. Say you borrow from your policy for a down payment on a duplex. Using a guideline called the 1% rule, it brings in about $2,000 a month. After all your expenses, you've got $800 in profit. You use $500 of that to pay back your policy loan, and you're still left with $300 in positive cash flow. The asset is literally paying for itself and paying you back.
But all these plays, all these strategies, they mean nothing without the championship mindset. The final and honestly the most important piece of this entire playbook isn't about assets. It's about the values and the systems that make sure the wealth you build actually, lasts.
This quote right here from Thomas J. Stanley, it gets to the absolute core of why most family fortunes just vanish. When the next generation inherits all the money without understanding the work, the sacrifice, the discipline that went into building it, they just see it as something to be spent, not something to be grown.
And the numbers? Well, they don't lie. That old saying, shirt sleeves to shirt sleeves in 3 generations, it is tragically common. You know the story. The first generation makes it, the second enjoys it, and the third generation loses it all. But here's the thing. This cycle is totally breakable. And how do you break it? It's not luck. It's systems. You hold regular family meetings where you talk openly about money. You create a family mission statement so the wealth actually has a purpose. You model good habits. You make sure your kids learn the value of work, and you actively mentor them. This is how you pass down wisdom, not just a wallet. So as we wrap this up, the ultimate question isn't just about financial strategy. It's about culture. It's about values. Because the greatest legacy you can leave behind, it's not the fortress or the engine or the assets. It's the wisdom, the discipline, and the purpose you instill in the people who are going to carry it forward. So what will you choose to build?